Netflix is down nearly 70% on the year. So, leading into these earnings that are coming up tomorrow, as of this recording, that'll be July 19th, which, by the way, I'll be live for to give those reactions. So make sure you're hitting that subscribe and that notification bell. But is it a situation for Netflix in which it seems like it's so bad that now it's good? Or are you going to be catching a falling knife? I'm going to give you my thoughts on this in today's video. But first, let's go ahead and just go over the expectations. So Netflix is expected to come in around $2.97 per share, $8.04 billion in revenue. That's actually smaller than YouTube, if you believe it, or if you can believe that. It's craziness. Just back in November of 2021, this was trading at $700 per share and a wild PE, forward PE. Now, today, the forward PE on this is trading at a multiple of just 17 times next year's earnings, which is right about in line with the S&P 500. Actually very low compared to some of the other FANG stocks that made up the FANG acronym, conglomerate, whatever you want to call it. You look at something like Microsoft that's trading damn near 30 times. Nvidia also, which is in the FANG, which I think should be replacing Netflix, trading around 30 times. And then you have Apple trading around 24 or whatever. So pretty low compared to some of the other tech stocks that you would pay a premium for. But is it time to look at Netflix and say, you know what? It's so bad that it's good? I think there's a couple of cases that you could make for this. One of them being the fact that they are actually going to start implementing ads into their streaming. You see, they've partnered with Microsoft on this. There was a lot of rumors flying around as to whether or not Netflix was going to acquire Roku. Turns out, really, the only communication they had with Roku was for the opportunity to implement ads into their content, create some sort of tiered system. And this is something that I think should and would likely make investors happy, because this is what they've been asking for. The total addressable market for Netflix is starting to shrink a little bit, not by a ton. I mean, 200 million plus subscribers is still a lot. We've seen that subscriber count go backwards over the last couple of quarters. And a lot of that has to do with competition coming in from Disney, from Apple, from Amazon Prime, so many other, HBO Max, right? I mean, you name it. There's a streaming service out there, and that has really started to tear into Netflix's, monster market share. So where do we go from here? And how can Netflix continue to grow their revenue and their free cash flow? For years, they were so adamant. Reed Hastings, the CEO, co-CEO, was really adamant on not providing ads because that's what made Netflix special. But now their hand is being forced at this point. We're seeing slowing of growth, and now Netflix is going to start implementing ads into their content. There's going to be a tiered system. You pay a cheaper amount for ads, obviously, and there's still going to be an ad-free subscription model, right? I mean, and that's what I sign up for YouTube Premium. It doesn't really cost that much, and I don't have to pay for ads. And before anybody yells at me because I am a YouTube creator, YouTube Premium still pays you. So I still get paid by if you are a subscriber of YouTube Premium. So leave the hate comments at the door as far as that's concerned. But looking at Netflix, and I think that there's definitely a case to where you could say, hey, this is an instance in which this might be good for the company. This might be good for the stock as far as the ads side of it's concerned. Obviously, we're going to hear some more about that in the earnings report, but there is some headwinds or really some cause for concern as far as this ad implementation is concerned. You see, Netflix was designed originally to be an ad-free platform. They didn't have to worry about implementing ads and getting with partners to share in the ad revenue. But when you have syndicated shows such as Netflix and Breaking Bad, and now you're trying to put ads in that content that never had ads in it before, becomes complicated. And I think that's one of the big reasons why they got with Microsoft to try to figure out how to take care of this. But they also still have to reach out to those who own the rights to that content. They have to make deals. They have to write up negotiations. That's all going to take time, and it's also going to take money. So that's going to be the real big key issue that investors are going to want to know about tomorrow going into these earnings. Forget about the growth side of things. It's going to be about the transition to creating ad-supported content. Now, long-term, I think this is going to be something that's going to be great for Netflix. So if you're a long-term supporter and a long-term investor of Netflix, I think you'll be fine. Over the last 10 years, we've seen 1,500% gains from Netflix, right? So it's been a rough stretch over the last 6 to 12 months. Yeah. But if you're a longer term holder of Netflix, I think this is where you'll be just fine. However, in the short term, because of the headwinds and the challenges that are facing them regarding the ad supported content, that could create some bumpy roads in the short term road ahead. But let's take a look at the chart here real quick, and I can let you know what I think might be happening. There's some really decent bottoms I think that are forming on Netflix that make the risk reward here quite good. So let's take a look. All right, so this is the daily chart here. And what's interesting is that Netflix has closed over the 50-day moving average for the first time, essentially for the first time since November of last year, right where the stock was, the same time the stock was sitting at $701 per share, or $700.99. And so this is also an interesting development. What I also like here is that the bottom seems to have finally seems to have finally formed right around 165. Yeah, you had one day where it came down to the 52-week low of 162.71, but this bottom support area actually looks like it has some pretty decent risk versus reward. Now, can it go down lower? Can it break the support? Can tomorrow's earnings absolutely ruin the stock? Sure. But like I said, risk reward wise, it looks quite good. I'm not telling you to buy it, but I think that it looks good if you were. This is my opinion, of course. Looking at when the last time we even saw Netflix down at these prices, you'd have to go all the way back to August of 2017, which is pretty wild to think about. Has Netflix regressed all the way back down to 2017 levels? For me, the answer is no. And I think that the reaction that we saw from investors selling this down from $700 a share all the way down to $190 is a bit unwarranted. Did they deserve to be sold off? Did it get way ahead of itself? Yes, of course it did. But Netflix, the story here isn't over, and nobody should be doubting Reed Hastings whatsoever. The guy is a genius, and he does an incredible job at the company as co-CEO, and he's not going to let Netflix falter. In my opinion, I think that'll get the ad-supported content situation figured out. And while I think it does come with a cost, I think it'll work out for them in the long run. So for those of you that are in Netflix, as I'd mentioned, longer term, I think you'll be fine. As I'd mentioned, 1,500% over the last 10 years. Year to date, yeah, it's down 70%. So even after being down 70% over the last, 8-9 months, it's still up 1,500% over the last decade. So keep that in mind if you like Netflix here. I think that if you're looking for a longer term approach, a good tech stock that has been beaten down into a pulp that actually has pretty decent value, again, trading at 17 times next year's earnings, Netflix is it. It's actually not bad. And I think that, like I said, in my opinion, this is one that's going to be fun to watch, if nothing else. And so if you want to watch it, you want to see those earnings come out and react to those live, make sure you're hitting that subscribe button and the notification bell, because I'll be live at 3:45 p.m. Eastern time to go over and react to these earnings live on air. And so I would love for you guys to check me out. Also, make sure you're checking out Medify. Guys, this is my new home. Medify, themedify.co is going to be where my new studio here, my new digs, if you will. Also, we'll be building a brand new studio as well. So this is a temporary setup, and it's going to be awesome. If you guys want to see what I'm up to and what we're developing and what we're going to grow into, it's absolutely free to just go follow us at themedify.co. Sign up, put your email in there. We'll send you a newsletter, just kind of let you know what we're up to. But guys, I'm super pumped for this new move, for this new chapter in the Own the Chaos life. I know that I went rambling here on the end, but if you guys are sticking around to the end of this, kudos to you. That's going to do it for me. I'll see you guys tomorrow.